Hi, Johnny. Are you well?
Morning, Albert. Always well on a cold Monday morning.
Yes. Today we're going to start our series talking about a machine. In the last couple of months, I had more than one client importing a machine, and the idea came up to talk about a machine because the machine forms an important part of a business. And then I started thinking, but so many businesses are dependent on imported machines. Johnny, if we can just think about farmers, uh, think about engineering companies, woodworking companies, um, manufacturing companies, bottling companies. There are so many companies importing
Mm.
very important machinery, and then that piece of equipment become an integral part of the business. Johnny, what is your experience? Have you got clients like that?
Yeah, definitely, Albert. I think things have also changed where clients would buy machines locally or second-hand, whatever, but they're definitely buying a lot more from China, those sort of things. Yeah, obviously because of costs.
Yeah.
Trying to they can't be that brand specific anymore. So especially from China, they'll import the machine because it's maybe a lot less, not inferior in quality, but a lot cheaper. And yeah, we need to establish how to insure those machines. What is the need? And yeah, those machines are integral part of the business. So it's very important to insure. Yeah.
Yes. So when I did a bit of research, um, we often get the bank. So let's start there. So
Mm.
the client decides he's going to buy the machine. He he decides on what machine he's going to get, and then he starts the process, and then the finance.
Mm.
Um, so that's the financial part of it. So is the business going to pay cash for it? Is the business going to finance it? And a lot of the
Yeah.
times the machine is financed and the bank send us the bank normally want confirmation, and
Mm.
then we just add that machine to the fire section of the policy.
Yeah.
And I think what's interesting is um, the fire section is just one part of all the risks. Johnny,
Mm.
name a couple of risks that you can see in the short-term side that the client is exposed to.
Yeah, well, before it even lands on his floor, it's being shipped. We know with all the wars going on, there's a lot of stuff that can go wrong. A lot that can happen on the ship. Needs to be unloaded, needs to be rigged. There's so many things that can go wrong even before it's on his floor. And then when it's on his floor, the exposure doesn't stop there. There's power surges that can happen. Water damage. You can have lightning. There's various things that can go wrong with those machines. People sometimes think because it's this big machine, it's tough, it's durable, not much can happen to it. But it's got a lot of electronics, fancy computer systems inside that can be susceptible to lightning, power surges, those sort of things. Yeah.
Yeah, so yeah, the risk actually starts when that machine gets loaded onto a truck to go to the harbor and then on the ship and then from the harbor in South Africa to our client's destination,
Mm.
and then the fire, the theft, the machinery breakdown, the loss of
Yeah.
profits, downtime when it's broken, um,
Mm.
all the staff that's dependent, the client that's waiting for the work to be finished. So that's just the short-term side. And then on the life insurance side, who financed it? Who's going to suffer if somebody died? Did the owner of the company sign surety
Mm.
for the finance?
Yeah.
So that is so in the next couple of weeks, we're going to tackle these risks one by one and take them apart and see how that machine can be covered. Johnny, value of these machines. What have you got any clients values? On my side, I'm just thinking about farming. Those farming machines are very expensive. Engineering machines.
Very much. Yeah. Especially if you import, you're easily looking at a couple of million rand. I mean, if it's financed or not, I mean, if something happens to that machine, you're not going to have the capital to replace that anytime soon. And a lot of the times, those machines are contract specific. Especially like in the engineering side, they've landed a massive contract. They don't actually have that machine. They'll buy that machine specifically for that contract. So very important. Yeah. So obviously, if there's finance, the bank will tell us what to insure it for, which will be new replacement value. But on second hand, you can do replacement value. You can do market value. There is different scenarios because even second hand machinery can cost a lot of money. So it's also very important. Client needs to establish if something happens to that machine, what will my actual cost be, my loss be, that I would need to insure for. Yeah.
That replacement value to me is very interesting, and you mentioned an important thing. You're talking about new replacement and then second-hand replacement. I once had a printing company insured to me, and he had one of those big Heidelberg machines, and that was an old machine. I can't remember how old it was, but that machine was old.
Yeah.
And then I wanted to insure it for a new replacement value, and then at the end we insured it on an agreed amount for what a machine like that can be replaced with.
Yeah.
So they don't even make those machines anymore. So
you can't insure it for new.
Yeah. So how does that work, Johnny? Take us through that a bit.
Yeah, so it'll basically have to be you'll have to chat to the dealers or the guys that sell those machines, engineering machine tool guys, to establish what the actual replacement for that sort of machine would be. Obviously, because it's not you can't get a new one, so you can't work on new replacement. And in the second-hand market, they'll be able to say, listen, we can get this sort of machine in sort of similar condition at X amount. And that would be the sort of value that we would look at. But that would purely be based on the client's knowledge, obviously, of the machines and obviously the industry, what we can, the guys are saying what they can replace those machines for, yeah. Because new is not always possible on those machines, yeah.
That's very interesting. I often see it when you walk through an engineering shop, then you see very old machines and you see brand new machines. And I think that would then be applicable to most industries. The sums insured, that's always the client's responsibility to help us determine the value. I mean, we're not valuators. And Johnny, how do you do that?
Yeah, once again, getting the necessary experts involved. But yeah, it is the client's responsibility to tell us what those values are. Unfortunately, we can't guess or we're not specialists in their field, so they would have to tell us. And it's important to check those values every once in a while, because especially on the second-hand stuff, the values can fluctuate. So very important that clients are on top of those things. They sometimes give us a value, and we up it every once in a while, obviously at renewal stage to a certain percentage, but the clients sometimes insure it and they never change it ever again, and that could be an issue at claim stage. Important to review every once in a while what your stock or your fleet of machines could be worth. Yeah.
And replacement value. So replacement of a second-hand machine, and would one distinguish on the policy document which of the machines is new replacement and which ones are second-hand replacement, or will the assessor determine that once there's a claim? How's that going to happen?
Yeah, that's a difficult one. Once again, you would have to establish. It depends on the section as well. So obviously, if it's under fire, you can have plant and machinery. But many times that would be sort of cover your broad side of the machines. But most of the times, if it's financed or something, the bank wants a miscellaneous item showing just that item of its own sum insured. So it purely depends on the scenario. And there's obviously different ways of doing it, yeah.
Yeah. Yeah, we often see on a schedule there's plant and machinery, and then
Mm.
there's specific pieces of plant
Yeah,
specified, and that's purely because of the bank wanting the interest noted on that specific
mm,
item, and
yeah,
that means that item is financed. And
yeah,
then whenever there's a claim, the bank will want their money first.
mm,
Um, yeah, that can easily become very complicated. I know very big engineering companies often have two machines of every machine that they need, just one as a
yeah,
backup. All right, I think if you're looking at our video and you've got any questions regarding a specific machine that is in your business and you are worried about the machine and worried that your business may be dependent on that
mm,
machine, um, um, please watch our series and maybe send us your questions so that
mm,
if we do not know the answer, we've got access to a lot of clever
yeah,
people that will give us the answers. And in this, we all learn. I think
mm,
sometimes people do not realize how dependent their businesses are on maybe one piece of machinery. And
yeah, yeah.
sometimes
And like I
they,
said, they pay a lot of money for it. They just think, nah, this thing is never going to break or nothing
yeah,
can happen to this machine. It's so expensive and big. But yeah, if that machine is not standing for a month because of a claim, it's a month you're not manufacturing or producing with that machine. Yeah.
yeah, that means staff needs to be paid and they're not
Mm.
working. Johnny, thank you very much. I think we're going to see each other in our next video. Johnny,
Anything in the comments is welcome. Yeah, like and subscribe. And yeah, thanks as always for having me, Alvin.
okay, Johnny, chat to you next time.